Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, January 6th. Well, we get a little bit of selling pressure, a little bit of a mixed bag of information. FOMC minutes, Janet Yellen kind of spooked the small caps. Market sold off a little bit, so Russell was the weakest yesterday. But the song remains the same. We sell off a little bit just to be bid up and close almost flat on the day with absolutely no volatility. So again, the pattern is consistent from 2016, and the first week of January we've seen absolutely no change. So today is non-farm payroll numbers. We have to keep an eye on at 8:30 Eastern time today here in the United States, guys. So just keep a good eye on what's happening. It's not the number, it's the reaction to the number. So just keep that in mind. And what's going to play a big role, obviously, is going to be equities, bonds, and of course gold and crude oil. So let's see what happens to that to those asset classes after the number is reported. I mean, I would hope that we would get a shakeup and some volatility. Now, my guess is this is the last non-farm payroll number before Obama leaves office. So as we all know, that the numbers here and everywhere else around the world are totally skewed. There is no evidence, but I'm sure the numbers or the reaction to the numbers are going to be just so fantastic that we're going to hit 20,000 in the Dow Jones today. And maybe that's what we need before we move lower. If you guys want to do a little homework on your own, take a look at the 1987 stock market crash, as well as 1929. It mimics exactly the same pattern. You can go into historical charts on any, just Google historical charts and take a look at it. Do a little homework on your own. You'll see that we are on our final leg up of this bull market that's been really this false bull market that's been induced by the central banks around the world. So when does the top come into place? People always ask me, traders. I have no idea. I only go by what the charts are saying to me, basically, and then I like to return that information out to the viewers and followers and students at TMT. So I don't know, but I did give you a big picture on the S&P cash that if we did break those two levels, you can look at that in the YouTube video yesterday or on our website, then I think that we're getting very close to a market top. Now, this whole euphoria of buying is what you need. You need this capitulatory top that throw in the towel, throw everything in, buy everything, mortgage your house, just keep buying stocks at 28 times forward PE is absolutely insane. So that's why I see that with sentiment at extreme lows, volatility at extreme lows, I should say sentiment at extreme highs. I apologize. That's what you need, and we need this euphoria of buying. So, and you need a very expensive stock market. So we have all of the recipe for a market top. Now, price will tell us when the top is in. Watch gold. Gold is one of my favorites for 2017. Crude oil is iffy, but I'm going to show that to you now. And a lot of viewers wanted me to kind of see if I can get a daily basis on crude. And I put out both special edition videos early this week, so take a look at it. All right, let's get right to it. So, crude oil. I'm just going to touch on it briefly because really nothing has happened. Now during the intraday, this is sort of like a little bit of a bigger picture on the videos because we all look at daily charts. Now, if you want to dial down or you really want some real good actionable support resistance areas, then you need the premium video. But for the daily charts, I want to show you the bigger picture because then if the trend is up, then what will you be doing intraday? You'd be looking to buy pullbacks, right, into support. Same thing if it's oversold, overbought, you want to be looking to sell rallies if the market starts to trend lower, right? So in this case, crude oil is stuck in a range. I said 55 above on a closing basis. Couple of days, a week would be nice. Create a new base and then break out higher. I think you see 60. Right now, we're just stuck in a range, and we're really in a base building range at the upper end of the range. So there's nothing wrong with this at all. There's nothing bearish about this chart except that if you look lower, our momentum indicators are starting to unwind. Now, that is also okay because that's what happens when you're obviously going sideways. When you're going sideways, there is no momentum, so it rolls over. Not that it's a bearish sign. I would like to see a pickup in momentum and a breakout of the current swing high before we start looking for new long plays or at least building new long positions. Okay, so 55 or 53, I would get a little more bearish. Ultimately, I like to see 52, a break and hold on a closing basis, 52. So 50, so you got about $2 to $3 range here that needs to be either be taken out. Once we take out these highs, remember guys, why? Here's a little bit of education. Why am I looking for a break above, let's just say 55 here and 52? Well, there are stops that are building back up here in place. Okay, there are big buy stops because people keep shorting it, trying to look for this market to go lower. And then also what? There are sell stops just below this, right? So what happens is if we break up, what happens? Stops get elected, boom, big rush in volatility with big spike up in crude oil. Same thing to the downside. So that's why I love seeing these horizontal base building patterns, okay? Especially when you have this ascending triangle here that measures up to about 110. I showed that to you, and again, take a look at the longer term picture of the crude oil. So right now, no change. We need to break 55 on a closing basis. And remember, guys, we could break 55. You see what happened here? 55 and a quarter. We broke it real quick intraday, and we came right back down again. There's eager sellers here above 55. You really got to take them all out. So that's why, me personally, I'm watching it, and if you want to take a stab at it or two, that's fine. But the better play, and also, mind you, if there's nothing going on in the indices, or you basically fed up because the indices are doing nothing, they just go sideways for 3, 4 or 5 weeks, and then they break out, and you want to wait for that breakout or breakdown, go look for another asset class. Try to anyway, because I mean, it's just so boring. And picking your spots, is probably the way to go with the index. But for the day, if something's not happening, like I like gold, I'm watching gold, and I like gold a lot. You could see on this chart, and we're going to get into it, there was that 1120 I mentioned. Here's my 3 downside target levels right now that I would like to really start picking at. But obviously we started ripping to the upside. Now the big key here, right, for those of you who did not buy it, or if you're looking to day trade it, now gold is bouncing. So what would you do? You look to buy pullbacks in gold. Now today, this morning, could be a reversal in gold because of what I suspect is going to be absolutely fantastic number, because that's what the Obama administration wants to go out on his high horse. So I think you're going to hit 20,000 today in gold. I think, in the Dow. I think the markets are going to rip, and then we'll see what happens afterwards. But there's no sellers. No one wants to sell. No one wants to buy up here other than retail. So we have to keep an eye on things, because anything can happen. Literally anything can happen. But you can see that money flow starting to come in. Okay, and we're getting our PMO crossover. It's momentum oscillator, and that crossed over already. So that's good. But that's the first bounce. Okay, now is this the dead cat bounce and then a big flush lower? I don't know. But I would be watching. We did get the gap fill. Let's see if what happens. The next pullback, if we can make a higher low, even if we stopped at 1140 and you didn't buy the 1120, this is a better entry anyway, because it's giving you a higher low from this previous low here. And then I think we should be going off to the races. Why? Because we also took out bearish symmetry. Okay, so there's gold. Here's the GDX, and you can see that GDX, and I did a Fibonacci from high to low on the way up. I just want to show you that the strength in the GDX actually goes first. 38%, we're at the 30% retracement now. So let's see if we get continued move higher. Okay, and you can see GLD not as strong, only at 23%, because GDX follows. There's nothing wrong with the metal. It's just that the miners go first before anything. All right, so just keep that in mind for today's trade. But remember, guys, if it's a good number and the markets go higher, the gold should go lower. Okay, but again, it's not what it should do. It's what the price action tells us to do, so we can react to it. Here's your spiders. Again, nothing going on here, guys. We're just chopping around the upper end of the range. Market just does not want to go down from this crazy, ridiculous move up on anticipation of what Donald Trump's going to do. And by the way, noticing all of his tweets, I would be very nervous too as well. I mean, listen, I think it's great, a good shakeup in Congress, and this is not a political video, but I'm already nervous on, my gosh, this guy's talking off, and he's not even a president yet. Calling out all these different companies intraday while the markets are up. I mean, that's just not right. I don't think so. Because you have shareholders that are involved in these stocks that they call. It's just not right. Anyway, so here's the spiders. and really not much going on, guys. I'm just going to go through what I see. Again, Russell did get hit a little bit, but again, that 135 level, watch that. That's going to be key. If we lose that 135, here's that thin zone that we're talking about. I think we ultimately get down to the 61.8% retracement right here. I think that's going to be the spot. We're going to fill that gap here and maybe even fill this gap and then fill this gap down here, and then we would reevaluate. But when is that going to happen? No one knows. But that's what I'm looking for in the IW. Now, if we take out the highs, well, obviously all bets are off in the short term for that gap fill lower. And lastly is going to be the Qs. So you got a mix in big cap tech. Obviously, we had a sell-off in the banks yesterday. Rates started, the 10-year started going lower. Bonds started moving higher, obviously, so that's why we had a little bit of a blip lower. I mean, but these banks have just, like Goldman Sachs, just had a ridiculous move. I mean, absolutely ridiculous. I don't really look at the banks as much, but like I said, if things are not moving for you, start looking at different asset classes, start examining, and put it in your watch list for your trading for the day. Have a great day. Be careful out there. Remember, non-farm payrolls 8:30 Eastern in the United States. Have a great weekend. We'll see you on Monday.